Good morning, everyone, and welcome to the European crossover webinar. And we are seeing equities continue to move even higher after Sunday's push higher, and then obviously extending that into Monday, and then coming into to today. And you can see here we're still pushing along here in S&Ps as well as the Nasdaq. But we can see here we've already had a pretty good solid run here already. Boy, what a run so far. I had updated the S&P charts. I haven't really done too much work here on the Nasdaq, but it's been quite the quite the run. Take a look at the year. The year, it actually finished towards its lows for the day yesterday, and challenging that weekly level again of 776. So we'll go and take a look at that. But let's go on and move into the into the data that we have for today. So coming in today, we do have Italian retail sales. It came in at 0.8 tenths. As well as a little bit. That's going to be it really in the European session as far as European data. And then, excuse me, we do have a Mexican headline and core inflation at 7 a.m. Eastern. And that's going to be it. Nothing here in the States here from what I can see here. But there might be, it looks like there is some data that's not there. It looks like there was a little bit of data that may have fallen off, so I'm just going to go and try and update that rather quickly while I keep it on the indices. And this is quite a run that we had. Boy, they've really run over everybody here. I actually didn't even pay much attention to it in the Asian session. I did see where we opened, and I saw some people talking about levels to try and short it at, and I was just thinking to myself, I'm just going to leave it alone and wait till the next day. As I mentioned, I had gone short for the Sunday session. I thought it came in at a pretty good level, and ended up spending the whole night, staying up the night, managing, just scalping in and out, managing my position. And actually to start the session, or the cash equity session, we were it was really kind of a blase open. And I thought we were going to pair back. And I thought potentially we may even dip back towards potentially maybe as much as 25.38. And then we saw the Nasdaq start to really take off. That dragged the S&Ps up, and then little by little it just kept moving higher, and it just as high as it went yesterday in the U.S. session. Boy, we kept it going here, and we've continued to add on even dramatically. So it's been quite the move here, and wow, so much of a run in such short a time of session. And to me, once again, I thought it would have been a bit of a surprise unless things had really turned around. I mean, at that moment, but I thought that, obviously the equity is always going to be a forward-looking type of instrument. But that being said, it was supposed to be a pretty tough week this week, although things have started to flatline, and that would certainly endear a good little rally. But even to this extent, I think people are just really surprised. I mean, I know I am to this. Unfortunately, I did not go in and jump in. I thought with the moves that we had seen, and like I said, if I when this market moved higher, I thought to myself, I wasn't going to try and force the thing. It looked like I said, we were just going to come back in, but then to find out that this market really had continued to go in and push even higher, left me thinking to myself, is like, you know what, I'm just going to step away and let this thing do what it wants to do. And I'm glad I did just that. So let's go and move into the FX side. I just updated the calendar I'm not seeing any, while I was doing that talk, I'm not seeing any changes here. You see here, the only difference was mortgage rates, UK BBA mortgage rate at 7 a.m. Eastern, but that's the only thing I'm seeing here as far as a change. Actually, nope. I was thinking I was rolling into the next day. So actually, you know what? I'm wrong. I am wrong. We do have JOLTS job openings today at 10 a.m. Eastern. I don't know how I missed that. And Canadian IV PMI at 10 a.m. Eastern. That is today. So that was my error. Go back in here. So as I said, we did have Italian retail sales, Mexican inflation data, New Zealand dairy prices, and at 10 a.m. Eastern, JOLTS job openings, and Canadian IV PMI, 10 a.m. Eastern. So let's move this out of the way. We're still running here. We do have a range here. Once again, I really didn't do anything over the Asian session, even pay attention. I was just like, you know what, this was just, I don't want to say it was a nutty move, but what I am seeing here is 27.22, and certainly not advocating any kind of shorting or anything like that. And I'm glad, like I said, I just stepped away. And then I think on the weekly I had like 27.38. So we got also here 27.36 coming in here. So we may see the market. I'm surprised we haven't even paused here, but I'm saying this, it's looking at this 27.22 to right up to here, 27.38. And I had 27.38 on a weekly also. So we'll go and mark these off, see how the market reacts. And actually, you know what? Because I managed the loss, I managed the position. I didn't even. I'm not going to say it wasn't a good little loss, because it was, but it could have been a lot worse. And I was thinking yesterday, I saw a video of a guy, and he had lost $500,000 yesterday. Holy smokes! I'm not going to say a name, but in that video, that guy was pretty upset, I guess, say the least. But anyway, let's go and move into the FX side. Okie dokie, here we are, and let's go on and we'll go into the news, then we'll go into the analysis. So the pound rallies as risk appetite returns, and traders await news on PM Johnson. Sterling rallied on Tuesday with a broad rebound in risk markets, encouraging some selling of the dollar, while traders awaited news on British Prime Minister Boris Johnson, who is fighting worsening coronavirus symptoms in intensive care. Johnson, 55, was taken into an intensive care unit in London hospital late on Monday after his condition had deteriorated rapidly over the preceding 24 hours. His foreign minister is deputizing for him to lead the government's response to the outbreak. Allen said that while the news of Johnson's condition was clearly a concern beyond a short-lived dip in Asian hours, it had not yet moved the pound because it was unlikely to mean a change in the government's policy direction to fight the virus. Certainly losing the head of a government is not going to inject confidence into the FX market, but government policy in a non-presidential system is ultimately crafted by the PM and his or her close advisor, says Stephen Gallo. It's also far too early to know what PM is being the PM is being incapacitated or not making it out of the hospital will remain for the UK economic and Brexit policy 3 to 6 months out. When there are too many moving parts, as we saw the entire Brexit process, sometimes the British pound just simply does nothing. Against the US dollar, starting to extend its overnight gains to 23.21. The dollar, long seen as a safe haven, has tended to strengthen when investors have panicked about economic consequences of a government-enforced lockdown to fight the coronavirus. But the greenback has dropped this week, and stock markets have rebounded sharply. Investors welcome signs. The rate of new infections across Europe and parts of the U.S. is peaking. Against the euro, The euro pound climbed marginally to 88.12 pence. Rabobank analyst said that Johnson's condition was a reminder of risk governments face in designing an exit strategy from the lockdowns, because it's not just elderly people with underlying health conditions that suffer. In short squeezes might encourage risk on, but the virus situation arguably requires a more skeptical stance. The analyst said, referring to the optimism that economies can return to normal once lockdowns are lifted. We face a long, hard road before things get back to where they were at the start of the year, if they could ever now. The policy genies have unleashed are out of the bottle. And the dollar dips as pandemic worries persist despite signs of hope. The dollar fell against the yen on Friday as underlying concerns about the economic shock coronavirus crisis kept many investors on edge. The pound clawed back some recent losses against the dollar, but the sentiment for the sterling remains fragile after British Prime Minister Boris Johnson was moved to intensive care after his coronavirus symptoms. The yen cheered Japanese Prime Minister Shinzo Abe unveiling of the massive fiscal stimulus worth about $1 trillion to offset the economic impact of the pandemic. Traders warned that further gains in the yen may be limited because Abe has agreed to declare a state of emergency for Tokyo and other parts of Japan to slow the coronavirus infections. Many investors are looking for signs of a peak in the pandemic, but some analysts warn about volatility given the unpredictable nature of the previously known virus. Signs of a slowdown in the spread of the virus provided markets a boost, but the reality is we cannot be certain, so it's natural for the dollar to come lower, said Takuya Kanda. It's difficult to trade solely on the factors from one country because so many countries are in a bad state because of the virus. The dollar came into Asian trade on a positive note as risk sentiment improved after the governors of New York and New Jersey pointed to tentative signs that the outbreak was starting to plateau. Also, in regards to Johnson, admitted to hospital on Sunday. Downing Street said he is still conscious, although his condition deteriorated in early evening. Britain has no formal succession plan should the Prime Minister become incapacitated, but Johnson has asked Foreign Secretary Dominic Raab to deputize for him. So hopefully he will recover fully. So let's go and move into the analysis. We spent some time yesterday kind of, additional time going into details, not only covering the notes for the week on the outlook, but, focusing on the levels and how we reach those levels. Today, obviously, is going to be more quickened pace, as we'll just go and hit the levels, and that's it. So bear with me. I'm going to pull out the trusty buys chart. For whatever reason, the notes weren't updating, so let me just go on and go into the Asia analysis to take a look. We are. I don't even believe this. It didn't even say even the notes are posted. They're not here. Hold on one moment. Okay, for the euro, it didn't save it, but it looks like it did save for the cable. So let's just take a look at the euro here. So the euro came into yesterday's session. You know that Friday we had already tagged down here to the weekly level. We talked about that yesterday in depth, how we reach these levels, and that's a weekly level 776. We actually challenged that again on Monday, taking it out by just a hair. You can see that just a little bit lower before rebounding back, or actually not rebound on Monday, but we're now holding here. So you could take a look at this after. Look how many successive days that we had sold off, essentially, 6 successive days of just lower closes. So a bounce back would be due. We're at a weekly level and we formed what would be considered a tweezer bottom. So the door is open for us to rebound, considering how oversold it is, and rebound we have. Resistance is going to come in at this level right there, which is going to be 882. You can see the significance here, all these touches here, right here, close, open, close, open again. And then same thing here, high, close and open right here. So it's going to be 882 on the upside. Actually, we had that, so we'll keep 883. And support, because we did go in and hold Support, then we would look for this area right here where the open was, right? That would be support. So if it dips back into that area, people would be trying to cover shorts. So it would be 810. And once again, for those who are new, the bias chart is a short-term posting, a reference point where we're looking for support and resistance over the next 24 hours from here rolling into tomorrow. So if you're thinking, wow, well, that's not giving much room there at 883. Well, this is the first line of resistance. So when we say resistance, it doesn't mean, okay, that has to sell off, although a lot of times we can see it turn down. But don't forget how oversold the market is. I mean, we've gone down 6 straight days, and we've come into weekly level support, and we have what we deemed here a tweezer bottom. So move here, we're just saying here is this is the next line of contention that you'll see, where you may see some longs peel off and a pause in the market. Okay, so doesn't mean we can't push beyond that. Resistance beyond that would come in right there. You see that close here? So these touches coming across, that'd be at 914. So, but we're looking right now, it's 883. Let's go move into the cable. So the cable dipped lower to start the week, finishing the week with what will be considered an inverted hammer. You see right here. Support will be 2160 with resistance at 2369. So far the high is 2355. We're coming with the 2369 coming in right there, just under this underbelly right there. So that's gonna be 2369. And Euro retains its bearish bias despite it bouncing back. So he's still bearish. And support's going to be 2160. Okay, looking here with the Aussie dollar. So the Aussie closed Monday's session above the key level of 60.63. This was that key area that if we broke below, it'll open the door for a sell. And we did go in, and here we closed just a hair below, but I don't know if you could actually say, I mean, it was below it at the time, which, you know, we were saying close below it, went out for a sell. We saw the follow through this day, but you can see as we started the beginning of the week, we rebounded here on Monday. Successfully defending the 60-cent level. Immediate resistance will be 61.69. We supported 60.19. Well, you can see right here, this is where we're coming up with the 61.69 coming in here. You can see we're pressing even further at this moment beyond that. But once again, it's within reason for this thing to jump to start to move higher, considering that we dip below it, we climb back above it. So we, you know, reasonably for us to move back above it would be considered, you know, not out of the realm. But we are above it. So right now we'd just be looking at the highs on this move as where we think maybe it can push up there, and the first line of contention. That actually confluences right here with this low here. You see that? And with this high coming across. And that would be 62.16. So where this market could go to before we start to see maybe a little bit of resistance, where the market steps in, I should say, or traders peel off some short-term longs. But certainly as oversold as we could certainly bounce back. Potentially if this thing starts to see further short-term, we could, this would be the key line here looking forward, 63.03. If someone's long and looking, okay, I'm long for a more medium-term move, where's my first real line of contention? That'd be up here at 63.03. Support is going to be actually, come back in here. It's going to be back to this line again, which is going to be the 60.63. Moving on to the Kiwi. So the Kiwi bounced back after testing 58.53 with a close above the key level of 459.14, basically the same setup as the Aussie. Resistance will be 60.38 with support at 58.72. So 60.38, and that's where we're coming in right there. You see right there, that close here, that confluence with that close here. So it's going to be 60.38. And bias is still bearish. And support will be 58.72. The dollar CAD had a bearish engulfing candle to start the week. You can see that here. With the bearish engulfing candle, you're going to go in and take out the full body. Some people feel more comfortable when the bearish candle engulfs not only the body but the wicks. I don't believe that that's necessary. Although, I mean, we were above the highs, and we didn't quite take out the lows. Now, that being the body. But the body, you can see it engulfed the prior body, although the prior body was, when you look at it from here, it looks like it's thin, but we've been trading in a fairly wide range. That being said, it was a bearish engulfing candle, which would suggest then a further move lower, and a move lower is what we've seen today. So support will be coming in at 39.72 with the resistance at 42.06 if we're going to push back above that. And that might even be a stretch to come here. Really, resistance would come in right there, which would be, you know, the 42 even here, because you'd be looking not all the way back up in here. But if you were short and you say, where would I put my stop? If you're trying to keep it fairly tight, this is where you would not want to see the market climb back above. So we'll go 42 even, but the support would be at 39.72. S&Ps are still challenging higher. We're 27.17 right now on our highs, or 27.17 3/4. And remember that key area, 27.22. Not advocating anything at this point, but I'm saying the key areas above in the SPOOs are going to be 27.22, 27.27, and 27.38. So, so let's move on to the peso. As I mentioned, I didn't even really look at it. I saw it, but I didn't really pay attention to it in the Asian session. But boy, what a move it's been so far. What an absolute move. Dollar peso closed above the resistance level of 24.60. Well, for whatever reason, that also didn't save. I don't know what's going on with this system, but it didn't save. So looking here, you can have a bit of a, it wouldn't be a shooting star because the wick is too, not the wick, but the body's too wide here. But certainly you can see, you know, we took out these prior highs. Remember, we had looked here, our resistance, remember, was 25.44. We'd actually already come up there. Let's see, eventually we got up to, wow, 25.76. So resistance, remember, coming in right there, 25.34. We were above it at the time, and we'd actually, I think the high at the time was like 25.52 or 54, and we dipped back. So we came up with 25.44, and then it looks like we went even further, all the way up here to 25.80. But we have gone in come up with a candle that would suggest the market may be a bit tired here. So for immediate resistance, we'd be looking at this bar close right there, which is going to be 24.96. And support on the downside is going to be this body here. You see that? So there you got the close, the open, close, open and close here, and then the open here. So that's going to be support right there. It's just below the market, which can be 24.23. 24.23. Moving on to the dollar yen. So the dollar yen closed near the pivot of 927. We talked about that yesterday. A close above will open a challenge to 1016. You can see these touches coming across in here. So right there, that challenge right there. 1016. Immediate resistance is going to be 954 with support at 874. So and I think we do need to change this back to bullish. So we're just right back. Remember the importance of this pivot. And we talked about that yesterday. And right now, there's just below this 9 area here. But the importance of that pivot here. If we can get above that, like I said, the resistance comes in at 954. You can see that coming right across these tops here. But that 927 is huge. And once again, it'd be a matter of closing above it, not just challenging it, but closing above it. We have not been able to do that. Let's go move into the cash dollar index. SPOO still pushing hard. We just saw 27.20. Dollar index extended its gains to start the week. Resistance will be 114. Actually, we're dipping back now lower. We supported par 14. Well, we've actually already come down here. We've already made it down to par 5. But we're gonna hold that par 14 for now, even though it is below it. We're gonna say that was support. So par 14, which actually from yesterday. And then for today, you'd be looking at this high. You see this, I mean, this low right here. That's going to be resistance at this point, which is going to be par 46. So keeping it pretty tight now. And we're pulling back right now, but it's still bullish. This should have been bullish, so it's not going to flip it around, because if we dip back, we could end up finding ourselves back on the bear side. But this should have been bullish for the last few days, just like the euro, despite its move back, off of these lows, it's still definitely bearish. So let's go move into the cross rates now. Let's go move into the cross rates now. So we are seeing a little bit of a further rebound. We discussed this on We discussed this yesterday because remember we had dipped back down here and we were holding this, and it was key because look at all the touches here coming across here. So we rebounded yesterday, okay, certainly with the now with the them still I saw Chi making some comments. Kind of caught my attention a little bit, but anyway, that being said, with the announcement of the stimulus package out of Japan, that's actually caused some additional movement. So we've seen the Kiwi continue to advance, not only yesterday but even advance today. Here's where resistance is going to be. You see right here the bodies. I like to go with the body, so it's going to be resistance 65.31. Still going to be bearish overall, but 65.31 for resistance. Once again, remember, the bias chart focuses on the resistance and short-term support over a 24-hour period. From here, looking out 24 hours. So while you'll see some of these close, where we're not saying, let's say if we're going to rebound. If you're rebounding, you're thinking, oh, I think that the Kiwi yen it's pretty clear it is. I think it's very oversold. I think that we're going to bounce looking out. And I'm looking for a move to, let's say you're going to move up to the 50%, a pause at the 38%. What would be the first line of contention? Well, it'd be probably right there. You see right there, 66.22, confluence here with this key level here. But these are on short-term basis. So right now for today, that's a line of contention right there, 65.28. Support, on the other hand, any dips back, people would say, wow, I need to get out of my shorts. Where can I find some dips back? Well, this is right where you see the close open right here, and also the touch with this low confluence in here. So we try and get some confluence here and here. And even you can see this high right there. You can see these two touches, basically three. So it's going to be 64.28 would be support. So dips back to 64.28 will be support. So if you were getting long, looking the other direction, say, well, I really don't want to see this market get below 64.28, or I'll be looking to pick up longs or defend them at 64.28. You can see that coming across all these touches here. Anyway, just want to go in and point that out. We're going to move on now to the euro yen. So we talked about the 1704 holding it, and certainly it had. And on Friday, it defended it. Remember, we said we not only challenged it, but we closed just above it. We saw some good follow through yesterday, and actually that was our resistance. Remember, 1817. We just went straight up with the levels, and you can see here we paired back against that 1817. So as we push higher, where's the resistance going to be? If you're looking on a very short-term basis, well, you see all these touches right here, right there. But you can see right there, a lot of good touches coming across. What we could do is we can just give it just a little bit more room. You see right here, here's the touches right here. Just a little bit, which is this high, which confluences with this close. Right there, which would be 1852. So that would be our resistance. Once again, you try and give it a little bit of room. Still going to be bearish. Oh, wow. SPOO's already dipped to 27.10. They were at 27.20. I thought they'd make it at least to 27.22. But once again, these moves are saying good morning to Takas. Bear with me. We're getting such big moves, or the overall moves have been so big, is that it's, for us to pull back, like you'd be thinking, wow, 10 handles are, a pretty decent move, and it is. But I'm just saying is because these moves have been so big, it's not even nothing to look and just see a market just quickly, we move to a price level that quickly sheds. Like right now, it's already shed 12 handles. So I thought we would have made it up at least up to 27.22. We made it only up to 20, and then we've ticked back. And support is going to be dips back in here. But to try and find some, where we see some touches, I'd probably like it a little bit higher than that. So let's go move into the intraday. right there. You see here? Not a lot of nice touches. Actually right in here, here. You see here, here, here. So dips back to 1784 would be defended. 1784. And let's go move into the Euro odd. Well, we'll continue to see some further dipping here in the Euro. We talked about this yesterday because we said how this market had been holding here. And then, you know, we had this darker close. Then we had to come back a little bit here on Friday, but the door was open if we were to push lower. And I think we started out the week already pushing lower here. And we said, okay, we're going to see where they're going to move to. And the support that we were looking at was 78.33. Well, we pushed well below that. So we're probably going to have to go and move into, here's a high right there, which is going to be support right there, which is going to be 75.41. See that high there? So we're actually going to go right there. The market can still come back off, but where's there going to be some support right now? 75.41 on a shorter term basis. Boy, they've really come off quite a bit. This move has been absolutely huge. And then on the upside, we'll go on and move into the 2-hour chart, get a little bit closer look. Oh yeah, right there, you can see that. See here, this low comes in with this high. I mean, it's a little bit of a difference, but you can see that would be the resistance area. 76.50. Still bullish overall. We kind of made a stand here. You can see here, right in here, a little bit of a support zone. We didn't quite make it, but you can see right here. You see the touches here, the close here, right here. This low comes in right there, 80.43. And that low was, well, they did tag that low because that low comes in at 80.58 and looks like that was the low right there. We'll just dip just a little bit lower here, which will be 80.44. And short-term resistance, the body's right here. You see right here, this body right there coming across. You can see all these little touches coming across here and here. That would be resistance. 82.90. Okay, let's go move on to the Aussie yen. So we have seen this going and appreciate here, and we got past our resistance. That's a key resistance going, and it's actually a weekly level. That's 66.50. So you can see once we got past, and we closed right there at the 66.50. So we've even been able to push beyond that. So once you hit those stops, where can we go to? Well, you can see this body right there, and that's resistance. 67.45. That's actually the high for the day so far. Market is rather oversold. And you can see with these markets, once they take out one level, and certainly you can see, look how this was holding the 66.50. So you can imagine the amount of stops that were there. So people are like, well, I still think it's going lower, but if it gets beyond 66.50, I don't want to be short. And then once we get beyond this, like, you know, 66.50, a stop there at 66.85, and we keep going further. The high, I better not take out this high, 67.27. We push out, and then this is where they run to some resistance at 67.45. Support on the downside, and he dips back in here. You can see right here, we use those same wicks here, so it'd be 65.68. This would be important right here, but if we were to dip back here, if you were bullish, you definitely wouldn't like this closing below 66.50. Definitely not. But if you're looking for where, if it were to dip, where would they look to go and cover? Let's just say 66 even. Actually, be 66 even right there. Right there with this touch here. Let's call it 65.98. These touches. So dips back into that. If someone tried to play the short side, they'd be looking definitely going to go and cover against that. So 65.98. And let's go and move into the guppy. We're still in this tight range that we talked about since last week. Remember, 32.56, 34.53. We're just trading back and forth, but it's kept it within, still stifled, I should say, remains stifled. So resistance is going to be right there, the 64.53. We actually tagged it already, or just about. So 634.53 is resistance. Still remains overall bearish. And support, well, we'll go into a 2-hour. Right there, the body touches. You see it? It's going to be 33.77. And lastly, let's get to the sterling odd. We have gone and come off. We were even a bit surprised here. Remember that this had even actually gapped lower here. We're pressing the downside, which is reasonable. And actually, if you look at the body touches right here, that would be the first line of, if we want to call it defensive support, which would be right there, 99.32. It doesn't mean that we can't break eventually lower, but my thought would be here is that this probably already caught. Look how we closed up here and we gapped. Now look where we were just on Friday. Look at that, 0463. See, so 04. So we gapped lower. So could this thing correct a more reasonable amount down to 97? Sure, but at this point, people are going to say, whoa, let me just find an area where to get short, but they're not going to step in short at this point. So that's why I think any dip just below here, and we're looking at 99.32, you'll find the market defend that. And then on rallies back, anybody's long saying, I'll get out. And the key level going back is going to be 0112, 0112. And that's going to do it. There we go. That completes the analysis. And we'll just take one quick look at the sprues before we dial off. So this is the areas you're looking at, 27.22 and 27.38. I've got, if you're looking at, and this is on a 2-hour, had 27.22, 27, and 27.38. But here's 27.38 here. I guess you could even take a look at this from a fib. 27.62 would be the 61%. And this thing keeps pushing higher, but initially I would have looked at a pause around the 27.22, but the fact that we're pushing back up here and we got up as high as 27.20, I don't think that they would just, we just about nicked that line too. So I guess we basically tagged it. 21.50 is what I had. So I guess if they did tag it, I was gonna say if they took it out, they probably want to push beyond the 27, maybe towards the 38. We shall see. But that is a level right here, 27. And I had it 27.22. It says the high was 27.21 and a half. And let's take a look here. No wonder they got a pretty good. Yeah, they sure did. Look, they made it 21 and a quarter, and I had resistance at 21 and a half. And then we saw it dip back down to 08. But anyway, that's what we have for today. Good luck trading, and we'll see you in the chat room.